From the fast action of the trading pit to the power brokers making the headlines, you'll hear it all on the Traders Network Show with your host, Michael Yorba.
All right.
Michael interviews the front page titans about the latest in trading tools and market trends in stocks, commodities, bonds, forex, and derivatives. The Traders Network helps you stay ahead of the curve and delivers tomorrow's trade today.
Yeah.
Now, here's your host, Michael Yorba.
Welcome back to the Traders Network. I'm Michael Yorba, your host. Thanks for joining us. Broadcasting to you live from the Dallas KFXR 1190 AM iHeart Media Studios and worldwide through yorbamedia.com. All right, we've got quite the show for you today. We're going to go down to ground zero, if you will, the heart of what makes Texas move on the first part of this show. I've got Michael Hanberry. He is the president and founder of BTJ Consulting, definitely an advocate for the people who are investing in oil and gas. And he's got a special guest that he's brought with him, Veera Raman. And Michael, welcome to the show. Thank you for being here. Kevin, could you turn Michael's mic on? All right, Michael, welcome to the show. Thanks for being here.
Thanks for having me, Mike.
My pleasure. It's still not on. All right, well, Kevin, our technical advisor is going to work on Michael's microphone and see if he can turn it back on. In the meantime, Michael's got about 18, 20 years in the oil and gas industry in a variety of facets, from offshore to in the business. And then also his partner, Veera Raman, is with us. Veera has 18 years in the industry, but from a different perspective. This man is an international oil person. Veera, welcome to the show.
Hi, Michael.
Thanks for being here. Veera, I wanted to open this up a little bit so that you and Michael can talk about the things that real oil and gas investors have to, and people that are in the industry have to work on to make an oil and gas deal work. So, Veera, can you give us just a little background on who you are, what you are in the industry, and then I'm going to open up with you and Michael so we can have kind of a free-flowing forum of what's going on in the oil business, what are some of the things that you have to work with in the oil and gas industry, and then obviously where do you think it's going?
Yeah, sure. Just a background on myself. I have 18 years experience with majors as well as independent E&P companies, and I've worked both domestic and international onshore, offshore projects. And I've touched many facets of the industry, everything from the strategic planning side to the commercial negotiations to full-field life cycle development of oil and gas assets. And that's kind of led me to my current state and current position where I am working with some of my partners, Michael Hanberry and Nick Ukich of Samper Fi, to develop our current projects in Oklahoma.
What's the name of your company, Veera?
The name of my company is Masa Energy LLC.
Okay, and what does your company do?
My company, I am directly involved. I'm a working interest, non-operated partner with Nick Ukich in Oklahoma on our Hoover project currently right now. And as of now, we have 6 wells that have been drilled and completed and tested and ready to go for production. So that's what my company does, is evaluate, analyze specific projects, operators that I want to do business with for numerous reasons, and we can discuss that at the right juncture. And so that's what my company does, is really find the value creators in the oil and gas business right now that are positioned to handle the market volatility of crude.
Great. Let's dive right into that. Michael, if you would chime in whenever you can. But between you two experienced oil and gas, not only investors, but actually operators in the industry, and I use that term loosely. Michael and Veera, what is your view on today's oil and gas markets and the prices that we're looking at?
Go ahead, Veera.
Well, I could start off by saying let's go back to 2014. If we look at 2014 And I would say the dramatic price in crude oil from July 2014 to where we're at now. Now, there's numerous factors. There's a host of reasons why we're seeing WTI and Brent at these current levels. And we'll start off with supply and demand balance. So if you basically look at the supply and demand balance in 2014, you still have a net surplus of roughly 700,000 barrels per day. So total world production in 2014 was roughly 92.1 million barrels a day. Total world consumption was at 91.3 million. So there's a surplus that existed that created a downward pressure on the price of crude. Now, that being said, what typically happens is a lot of the higher cost, higher capital type projects that large corporations and mid-sized corporations usually start shelving those projects, and they put them on hold just because their break-even price is higher than the current crude or Brent prices. So you're starting to see stacking of rigs. If you look at the Baker Hughes rig count, January 23rd, we're at 1,633 rigs. And if you looked at previous week, we're at 1,676. So you could see, and if you go back and go all the way back to July, you could kind of see a steady decrease that is occurring just in rig count. So what's going to happen is you're going to start curbing supply. Some of these projects will go offline. Some of these basins are just too costly, too capital intense to drill and produce. And so we'll see a situation where, the cure for the current oil price is the oil price itself. So fundamentals will start to balance again, and, we might start seeing supply shortages created just due to these projects coming offline, due to production legacy assets declining over time. And from a demand perspective, there's been a lot of data published out there. We are in a situation where we're seeing weakening demand. Global manufacturing data states that the majority of the countries that are part of this survey, there is a weakening demand that's occurring. But at the same time, with lower oil prices, you're going to have lower raw material costs that goes into developing different sectors in different industries. So we should potentially also see demand over time start to increase as well. So that being said, there's also other factors. There's a appreciating U.S. dollar that's always had a downward pressure on crude prices. Whenever the dollar appreciates, crude starts to decline. And then you have global tensions. If you look at Russia, the Ukraine, Iran, Syria, the Middle East, there's a lot of geopolitical tension right now. And yesterday, if people had time to watch the news, in the Middle East, Saudi Arabia, King Abdullah passed, and now there's a new successor in place, his half-brother. So that will also kind of affect the geopolitical view and his stance on
Let me jump in there for a second, Veera, on that note. I was reading that he was actually one of the real linchpins in why we have the crude market price at where it is right now. Do you think that since he's gone, that we're going to start to see a little change in the landscape of that supply-demand ratio?
Well, I think you'll see a change in that landscape over time here. I don't think it's going to, the effect is not going to be immediate. All of this is a ripple effect which will take some time. Now, Saudi's position, if you look at their position, they don't want to give up market share. What does that mean? They don't want to allow expensive oil into the markets versus cheap oil, which they have. And the one thing about the OPEC nations, there's several OPEC nations, Saudis, UAE, that have plenty of cash reserves to weather out this market volatility. But there are other nations like Venezuela that are currently in a position where it's a detrimental effect to their overall GDP, their net exporting country. They're getting greatly impacted. Venezuela, Russians, they're getting greatly impacted by the current oil prices now. And you also see those net exporting countries going to China to secure loans to balance their budgets.
Veera, let me interrupt you for just a second. We've got to pause here for a minute and take a commercial break. And when we come back, though, I want to talk about stuff that's here, homegrown stuff, what's going on here, and the affiliation that you've got between BTJ, Michael Hanberry, and your company, Massa Energy. All right?
Okay, sounds good.
All right, we'll be right back on the other side of this break with Veera Raman and Michael Hanberry, BTJ Consulting.com, and Massa Energy, LLC.
It's been called the most intense and hard-fought games in all of college sports.
Head fakes from 15, throws in the corner, Turner for a three, bullseye.
From every close game to every blowout, it's all right here on the Red Raiders Sports Network.
The Red Raiders face off with Iowa State Saturday, January 24th in Lubbock. Tip-off is at 3. The pregame show will start at 2:30 on Talk Radio 1190.
BTJ Consulting was founded specifically to consult with accredited investors on how best to manage their oil and gas investments. The emphasis is not only on direct participation in drilling projects, but includes opportunities in the purchasing of oil rigs, service and equipment companies, real estate and/or the purchase of royalty interest through lease pooling. This strategy further mitigates risk and spreads their clients' investments over the entire sector whenever possible. For more information, call 469-518-5008 or info@btjconsulting.com. 469-518-5008 or info@btjconsulting.com. That's 469-518-5008 or info@btjconsulting.com. And tell them Yorba sent you.
With the late winter we had, the leaves are falling. This is Michael Berry, and that means gutter cleaning time. I hate gutter cleaning. I don't do gutter cleaning anymore. That means scooping smelly muck out of a gutter, perched 10 feet high on a ladder where you could fall and blow your back. I'm at a point in my life where I don't do things that might hurt my back again. Leaf Guard, a one-piece covered gutter system that allows water to flow in but keeps the leaves and the debris out. Comes with an unconditional, lifetime, no clog warranty. That means if it ever does clog, it won't. Leaf Guard will bring out their ladders, their technicians, and unclog it free. 214-504-2154. Give them a call. Let them come out, show you what it does, how much it costs, why it's fantastic. GuttersDallas.com. GuttersDallas.com. 214-504-2154.
Take a look under your bed. Find stuff under there? What about jobs? No? Now try your basement. There's a pair of overalls that overall you're not so into anymore. A perfectly good laptop that hasn't seen your lap in months. And even more stuff, but still no jobs? Well, you really have both. See, stuff is defined as household articles considered as a group. Sometimes this stuff is no longer needed. Wait, no longer needed? That can't be right. Because remember those jobs you were looking for? Those are really needed. And they're the stuff inside your stuff. Even inside that winter coat that moved with you to Phoenix. Our job is to unlock those jobs. And it starts when you donate your stuff to your local Goodwill. Here's how we do it. When you donate to Goodwill, we sell your stuff to provide job training for people right here in your community. So just by teaming up with Goodwill, you help create jobs. And isn't that worth parting with the leftover keytar from your 80s cover band? Goodwill. Donate stuff, create jobs. Find your nearest donation center at goodwill.org. A message from Goodwill and the Ad Council.
From the Talk Radio 1190 Weather Center, this update is brought to you by Village Builders. Sunny today with a high in the upper 50s, clear tonight with a low around 42.
Found only within Dallas-Fort Worth's finest communities, Village Builders, Dallas-Fort Worth's premier luxury home builder. Visit Somerset, now open in Colleyville. Village Builders, building your dream since 1973.
Village Builders is an equal opportunity home builder.
Welcome back to the Traders Network. I'm Michael Yorba, your host, broadcasting to you live from the Dallas KFXR 1190 AM iHeart Media Studios and worldwide through yorbamedia.com. All right, I'm joined in studio with Michael Hanberry, President, Founder, BTJ Consulting, and on the phone, Veera Raman, Massa Energy, Managing Director and Founder. All right, Veera and Michael, we talked about some of the general landscape of the oil and gas industry on the last segment and some international flavor. Let's bring it home. And Michael, I'd like you to chime in on this one here. You brought Veera to the show. You were on the show last week, but let's talk about, number one, how you guys met, and then what you're doing together and why you're doing it. Michael, bring it in. How did you meet Veera?
Well, Veera was on another project, and we were collaborating together. I was consulting with him regarding the Semper Fidelis Exploration and Production project. With all his background and experience, it's clear that even an industry professional likes that opportunity. 125 wells. We drilled 6 in 2 months out of the chute, hit them all, and so we've pretty much proved up this opportunity. And of course, it's the perfect time and place to be positioned where we're at, not heavily leveraged at all, and got $1 million on the ground in front of those investors that we're consulting for. So, I mean, Veera, I think you might agree with that. This was just a perfect place and time.
Yes, I absolutely agree. If you look at what attracted me to BTJ and Semper Fi, I'll start off by saying they both have very strong management teams. They have a wealth of experience. They have geologists that have been around for a long time, that are very familiar with the Oklahoma area. They also have a proven track record, which is a critical point. Like Michael mentioned, we're 6 for 6 now. We've had 6 discoveries, oil and gas, and that track record speaks for itself. And they've also had other successful wells in Oklahoma as well. And overall, we're looking at a very favorable geologic spot with multiple stack zones and abundance of acreage that these gentlemen are going to pick up going forward. So there's plenty of upside with what we're doing currently now, and also, the positioning, like I mentioned earlier, is you want to be associated with the value creators that can weather through the crude oil market volatility. And one of the reasons they can is their break-even points and their cost to produce are much lower than what WTI is now. And it's conventional oil plays, it's straight holes, and that's some of the reasons that put them in the position to take full advantage, right time, right place, to really capitalize on our investments.
And if I get this correct, Michael and Veera, you started out by an affiliation of a consulting basis, and then once you really drilled down into the geology, the projects, the management teams, actually you became an investment partner in, if I got that right, the first 5 out of the 6 wells that they've drilled and hit. It was valuable enough not just to be a consultant and get money off of this, but actually put your own money where your mouth is. Isn't that right?
Yes, I have my own money invested in these wells, and will continue to invest my own money going forward in these wells. So that is absolutely correct.
What do you see, Michael and Veera? What do you see are the opportunities and the risks on the horizon for independent producers like you? And we'll just use these 125 wells you guys are going to drill as an example.
Well, I think more for me, the perfect position is to you want to buy low, sell high. You want to drill at a very low cost, like Veera was discussing. And by the time I get all the equipment for less money, all the people that are sitting on the sidelines, as again Veera discussed earlier, at their break-even point of $80 or $70 or $60 a barrel, we've got crews that are standing by ready to go to work. We've got equipment I can buy for half price. So it starts getting better for me. $20 a barrel is still okay with me. And if I can get, instead of 1 million barrels behind pipe like we have now in 6 wells, by December, if I can get 100 or 125 wells and 12 or 15 million behind pipe, and we're back to 90, that's a great day. It's time to make hay while the sun shines for us.
So let me jump in there real quick. So what I'm hearing is the 80, 90, or I should say that the $300 to $750 a foot cost to drill the wells is now a complete flip-flop. And that's what's really the independent, non-leveraged companies have a niche, and they're actually got the leg up on this when it comes to the cost to actually produce the oil. Is that right, Veera?
Yeah, that is correct. So if you look at services, it's a direct correlation to crude price. So crude price drops, services price drop. And we're able to take advantage of that in our cost per foot on the drilling side as well as on the services side with physical assets, whether they be rigs, transport trucks, equipment. So that's one of the keys that the current marketplace has created. And, once again, we're not in the unconventional basins that are heavily CapEx oriented. We're in conventional plays, so we can take advantage of almost this perfect market condition that's occurring and keep our cost lower to explore and drill and produce these wells.
Now, you both had mentioned that you open this field up, you guys are drilling, and you hit 6 out of 6, the first 6 out of 6, okay? That's an anomaly. That doesn't happen in this industry. Anybody who's ever invested in oil and gas has like really had to kiss a lot of frogs before they found a prince. What is the difference here? How is it that you get that kind of a success rate right out of the gate?
Well, I think Dan Whitten, our lead geologist, he's 93 years old. He's the last living founder of the geologic library there. He's known our partner's father for 50 years plus. He came to us and said, look, I've done the geology out here. I've come through here with the majors. I've watched them hit gas and leave it in the ground. There was no transportation. That wasn't worth much to them. They'd hit 100-barrel-a-day oil wells and cap them and walk away. It wasn't commercial enough at $1 or $2 a barrel. However, just me and a handful of men, that gas is now there's transportation and oil's 40 or 90 or 100. And so it's very economical to drill where, he could point out exactly where they found it. We're in the middle of already known proven oil fields surrounded by production. And again, multiple stacked pay zones and multiple well projects go to mitigate risk. It's not that we can't miss a well in an oil field, but with all that well control that we already have there, makes things a lot easier for us to go back and redo the geophysical work with all that new data and actually get better wells, higher on structure, et cetera.
Now that's from Michael's perspective. Veera, we've got about 3 minutes left in the interview. From a technical perspective, why are you seeing such a success rate with this project?
Well, to tee off Michael's point there, one of the advantages we have in the field right now, people have to remember these aren't wildcat wells. There's well control out there. There's wells that were drilled, from 1920s all the way up to current year and date. So there's a lot of well control out there, and some of the majors that were out there a couple of decades ago that drilled the wells and left the fields because it was uneconomic for them. It's highly economic for us, just due to our cost structure and our operator doing a phenomenal job managing all aspects of exploration and drilling and production. So as Michael mentioned, another thing that we have in terms of upside is we have multiple stacked zones. And what that means is there's different sand intervals within the wellbore. There's different basically oil behind the pipe that we're able to initially recover one sand, move up the wellbore, recover the next sand. So when you have, let's say, anywhere from 2 to 8 sands in a wellbore like we currently have with our 6 wells, it just puts us in a position where the well is even more economical. So when you have stacked zones like that and the type of geology we're seeing out there, it just bodes well for what we're trying to accomplish.
For continued success in that same field where you guys can go out and hopefully keep that same win-loss ratio, 6 out of 6, for the next 125 wells. I mean, God forbid you're going to hit somebody, you always stub your toe somewhere, but with that kind of a record, I want to... Veera, we've got to close on the segment, but I want to thank you so much for taking the time and being on our show and bringing what you did to the table.
I appreciate it. Thank you for having me on the show.
My pleasure. All right, that's Veera Raman, Massa Energy, LLC, Managing Director. And, Michael, thanks for being on the show.
Thanks, Mike. Thanks for having us.
My pleasure. That's President and Founder, BTJ Consulting, btjconsulting.com. You got a number real quick, Mike?
469-518-5008.
All right, perfect. We'll be right back on the other side of this break with Nathan Hansen, President, CEO, Robex Alternative Fuels. These guys clean up the mess that some of the offshore companies have left, and you're going to want to hear about this publicly traded company. We'll be right back.